Well, as we open up our futures trade here on a Monday, we'll bring in a little expert help to help us analyze how the markets are opening up. We'll go to the phone lines and welcome Dewey Strickler of AgWatch Market Advisors. Dewey is based in Franklin, Kentucky. Let's go to the phones right now and welcome Dewey to the conversation. Dewey, happy Monday to you.
Hey, thanks a lot, Marlon.
Appreciate having you on board. Let's go take a look at how we're opening up the grain trade here this Monday morning. Let's go to the corn board first. And these are live quotes direct from Chicago. We'll see how things are opening up. So far on the board, a little bit of weakness here on the corn contracts. It looks like that nearby March contract is actually trading 2 cents lower at 367 3/4 per bushel in a very narrow trading range from the overnight hours. It is on the low of the range. Well, now it's within 1 tick of its low. We have the May contract down 1 3/4 at 374.5 per bushel. Now let's take a look at the soybean trade. How are we opening up there? We have the March soybeans down 10 1/4 at 1057 1/4. They were weaker overnight, but not that much. So we're accelerating to the downside here on the open. We have the May contract down 10 at 1066 per bushel. That's about almost 12 cents off of its overnight high. Dewey, what do you think about this open in the soybeans here? Kind of a disappointment?
Oh, I guess it would be for some people here. We do have a little bit of improvement in weather, got a drying trend in Argentina, and we got very good conditions in Brazil. So I think, the markets are taking that under consideration.
Well, we have had a pretty significant move in the soybeans for several weeks, and it looks like maybe it has peaked out for the time being. Do you think this is a temporary correction, or do you think we'll have to go down and do some of those retracement levels that a lot of traders talk about?
I'm showing, Marlon, that this market is beginning to stall out. I'm showing that we very likely are going to be putting in some very important tops up here close to where the levels they are now. I mean, you got a couple of candlestick formations that are showing on the soybeans here it's given us some indication that we're looking at some topping activity here.
All right, well, Dewey, let's look at the wheat market, see how we're opening up there. With the weakness in the soybean trade, we have the wheat market just barely moving at all. We have the March contract unchanged at 428 1/4 per bushel, May down just 2 ticks now for a half a cent at 442 3/4. Meanwhile, in the Kansas City trade, currently we have March down 3 1/2 at 439 1/2. That's off our high by getting close to a nickel now from overnight. May down 3 3/4, and in the Minneapolis wheat trade, here we have the March contract down a half at 568. A lot of pressure in the Kansas City market. Is that still spillover weakness from what happened with the moisture coming in here a week ago?
I think absolutely that it is. I mean, when you look at it, the market here right now, we got some moisture that has come in, and we don't really see any threats here right now for the moment. And, it's a little bit early to get concerned about, obviously, about with these temperatures where they've been warming up and then dropping, whether it's going to do any damage here, We're way too soon for that.
Of course, we'll be getting export inspections coming out later on this morning now that we're back to a regular routine here. But in your opinion, what's going on here with these exports? About the only thing we've heard of in the last week or so has been corn exports.
Yeah, I think we've really been looking more at some routine corn business than anything else. We've seen it pick up a little bit, whereas beans, we're beginning to see exports begin to diminish here. When you look at the exports inspections, like last week, I think that was about the 9th consecutive week that they've been down. And when you look at shipments, they're down 44% from their peak. So I think beans demand on exports is beginning to lose some of its luster.
Okay, a quick peek at our cotton market, and then Dewey will take a quick break here. Right now on the cotton, we have the March. Wow, up 138 points at 74.42. They've got a tremendous day going on. They were sharply higher overnight as well. We'll pause for a quick little break and come back and talk more with Dewey Strickler of AgWatch Market Advisors when we come back. Well, we're back with you here on the Market Day Report, and we're talking with Dewey Strickler of AgWatch Market Advisors. He's based in Franklin, Kentucky. Dewey, right before the break, we took a peek at that cotton market there, and we had triple-digit gains, very strong gains, and we're up well over 74 cents in value in this cotton market right now. Just wondered if you had any inklings as to what was driving this market so much higher here in the last few days.
Wish I could give you an answer, but I guess I'm going to have to plead dumb here. I can't really give you an answer of what's going on in cotton here for the past couple of days.
It is being led higher by the nearby contracts, so we'll endeavor our efforts here to find out what the factors are behind that move here today. But boy, a definite upward push, that's for sure, by 135 points. Dewey, on the livestock trade, what an interesting close to the week that we had last week, where we had the live cattle going lower, the feeder cattle went higher, and the lean hogs went lower. Let's see where they are now. We have February live cattle down 35 at 119.90, so we're seeing a little follow-through weakness. April down 40 at 118.58 per hundredweight. And then on the feeder cattle side, where we closed higher on Friday, right now we're lower. We have March feeders down 28 at 131 even per hundredweight, and the April down a dime at 130. This is all in the midst of what was deemed as fairly, steady to sharply higher cash cattle trade last week. It went sharply higher at midweek and then leveled off Friday at the same prices. So what do you read into that with the futures starting to weaken up a little bit, with the fundamentals actually looking for higher prices?
Well, actually, it was last Thursday the market started looking a little bit top-heavy in the live cattle. I think, any positive news in the cattle market has already been factored in, and I think we're going to start looking. Maybe the market might still edge up a little bit, but I think it's one of these situations where, as far as the specs are concerned, buyer beware, because we're getting terribly top-heavy.
So you think that run upward that we have seen on the charts here was just kind of flaming out too much?
Yeah, we're starting to lose momentum.
Okay. What about this hog market here? Let's take a look at how we're opening up there. Remember, we closed weaker last Friday on the lean hogs, and right now we're weaker again across the board. February lean hogs currently at 64.88 per hundredweight. That would be down 42 cents in value. The April lean hogs currently down 78 cents. And they're trading at 67.70 per hundredweight. So, Dewey, we're already getting down there about 90 cents off our earlier highs from this morning, and just kind of dragging the bottom of the market range here today.
Yeah, that's right. Now, when you look at the hog market, Marlon, it looks a little bit different, obviously, than what the cattle market does. Technically, when I look at the hogs here, they're showing me that, we're trying to put a top in, but this does not look like what I call a typical type top. It looks like we might still see maybe one more push higher in the hogs before we finally do put a meaningful top in.
It's been just kind of in a choppy pattern, fairly flat for about a month now.
Yes, exactly. And I think that this is just a corrected type pullback. We got maybe a little more higher to go, and then I think that'll be it in hogs.
Really? Okay. Well, Dewey, I thank you for the comments, and I hope you have a great trading week out there, all right?
All right. Thank you very much.
You too, Dewey. Dewey Strickler with AgWatch Market Advisors. He's based in Franklin, Kentucky. So a definite negative bias across the board so far in livestock in the early going on a Monday, but it's very early.
Okay, we'll keep watching
early.
that. It's very early. In fact, the very first report of the day.
Yeah.
All right, thank you so much, Markets Editor Marlon Bowling.